So they finally shut me off after I lose almost $1 million in one pop. This is the thing. This is what I'm talking about. Like in the moment, like people would be saying, like, how could you lose $800,000 and not stop yourself? Because I went on tilt, because I was so emotional, and it's just not clear-headed when you're losing your mind, right? So I would I remember waking up that next morning and thinking, what am I doing? Like, who was that person? Like, why would I ever allow that to happen, right? So I obviously didn't learn my lesson, because 1 month later, I did the exact same thing. My firm did the same thing. They didn't shut me off, and I didn't shut up, lost another $700,000. So we're talking 1.5 over 2 trading days. Stopped myself, and I have another $1.3 million in my bank accounts.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today. Hey guys, welcome back to Market Mamas, and I am incredibly honored today to be able to host a conversation with a trader who has been around this market for decades and has had an incredible journey and experience in learning to trade and resilience and growth and opportunity and millions and all of the things that it takes to actually really be that long-term trader that, I think we talk about all the time of wanting to be a consistently profitable trader and be a trader for years. And so this is someone who has actually lived that game and can speak to the real life journey that it has been through. So honored to welcome you, Scott Pulcini, to Market Mamas. Thanks for being here.
Thanks for having me. As the market melts down while we're talking.
It's such a bearish day today. I can't even believe it. We're recording this on FOMC end of July, and it just has been sinking today. Oh my goodness.
Right. And it's very rare to see this kind of move. I think this might be news driven too, because crude's ripping as usual. I call it the headline ping pong with the Iran stuff. But yeah, it's very unusual to see this kind of movement, before the rate decision.
100%.
Especially when I show you came in the ES a little bit ago, it's even more surprising. But good to at least have some activity to show you.
Yeah, I would love that. Yeah, this is the market that we're in right now. I mean, there can be news and we've been talking about this Iran situation for a long time, but it's still a very active situation, and some news won't cause a reaction and some will cause a significant reaction. So it's an interesting world that we're trading in right now for sure.
Trading is difficult as it is. It's probably one of the hardest things you can do profession-wise.
Yeah.
But then when you throw this, this randomness in with the headlines, it's very, very trying. You have to have your stops in, respect your loss limits, your daily loss limits, and just, you just got to, if you're going to trade during this period, you got to accept the unknown, which is happening nonstop.
Yeah. Thank you for saying that, because I think a lot of people want it to be easy. And then if they are struggling, then they internalize it as they're just not good enough. But I think you got to zoom back and use the protections that we can put in place, such as the daily loss limit, to know that this actually is a really challenging thing. And if you want to persevere, you have to hold steady through a lot of volatility personally and on the markets.
Yeah. And you have to have your daily loss limits. I mean, that's one of the two biggest mistakes that retail traders make. They're over trading their account size wise, right? That can withstand losses. If you have a bad day, they're blowing out their account, and they don't have a daily loss limit where they just say, things aren't making sense today. I'm done. I'll see you tomorrow. And you got to be able to do that, because some days, like right now, markets don't make sense as far as, the usual edge or the usual patterns that you're seeing, right? So you got to be able to just say, uncle. And it's taken me, we can get into that story. I don't like telling it, but it's a good learning thing for traders to hear the story. Just be like, I need to respect my daily loss limits, because I don't want to be like Scott.
This is amazing, because we actually did not plan this, but in other communities that I'm in, I'm a huge proponent for the daily loss limit, because sometimes the market is not in sync with your style and you were not reading it right. And that's a gift to be able to have that lockout parameter to say, this is just not working out today. Cut your losses. There'll be a day when it's more in sync with your opportunity and you can nail it. And so I'm actually a major proponent of daily loss limit, and I trade with it on all my charts. So I love that you said that. But, you alluded to a hard lesson that you took. So can you give us a little bit of backstory about where you started with trading and how it evolved for you?
Yeah, I started, so I originally worked at the Board of Trade. So I was I started in the 5-year option pit, and then I moved to the bond pit, 30-year bonds. And that's like the big leagues, right? I mean, that was when it was back on the floor. This is 1997 I started. So this is right around 1999, 2000. And I was in the bond pit, and talk about a stressful job. So I was the guy that took the orders from the hand signals that these guys are firing in. And, I'm working for a broker. And if I make one mistake, I could blow my broker out, right? He could lose $1 million on the spot and he'd be done. So it's very, very high stress. And these guys flashing the hand signals, try to be, cool guy, do it real fast. And I'm colorblind on top of it. So a lot of times it's hard for me to see the hand signals. So it was very, very, very stressful, but it got me battle tested for actual trading, when I became a trader. So I left there, and one of the guys at the board trade, that's when trading started to get on the screen, become electronic. He started his own trading firm, and it was literally the Wild West back then. There was no education as far as screen trading. Most of the pit traders, didn't even know what to do because, they were in the pits, and it wasn't transitioned fully when I first started, right? It finally, gradually knocked guys out where, they were great traders in the pit because they were able to see a broker's expression or hear the roar of the crowd and know, hey, I'm going to jump on this move. You get to the pit, there's nothing like that, right? So I don't know the percentages, but I would say probably 90% of the successful floor traders were done after that period. And it just goes to show you as we get into the conversation that, almost all edges disappear at some point. So you always got to be evolving, right? So these pit guys thought they had it made, and then the pit goes away, and now, selling, cars or literally selling furniture, guys that I know. Not that there's anything wrong with that. I'm just saying it's like they went from, making millions of dollars trading to having to go back into the real workforce. And, you got to be prepared. So anyway, I was in the bond pit, started at this trading firm, and literally they sat me down first day. And again, there was no rules, there was no education. So it was like, pick a market that you think you want to trade and see if you can figure something out. It was literally like that. Here's your loss limit. Some of the daily loss limit was $2,500 when I first started. So I'm trading one lots. There was no micros or anything back then. I'm trading one lots in the E-mini S&P, literally just scalping around. And the very first day I hit my loss limit the very first day, $2,500. I'm sure but a lot of traders, I don't think they know how hard it is to lose $2,500 just clicking in and out. You have to be wrong a lot of times to have that happen, right? It's not like I put on a trade and held it for 50 points. It was in and out, in and out. I was wrong that often. But I was just trying to figure out some kind of edge or something that I was seeing electronically because it was the first time I was on the screen. So basically I almost got fired my very first day because I think I broke the loss limit. I think it might have been 2,000 and I went over it. And I know they fire certain traders if they, because they tell you do something. If you can't respect that, then you're just showing your personality and you're not going to listen, right? And it goes for your own accounts. If you tell yourself that you're going to stop at a certain point, you need to stop at a certain point. Again, it's not that easy because the emotions involved. That's why you have to have the daily loss limit, like we talked about. Tell your broker to set it up so you don't even have a decision in it.
Yes.
I digress. Anyway, so lost all that money the very first day. Relatively, it was a lot of money. And then spent the next 2 months. I did not have one winning day for 2 months. A friend had got me the job at the firm. It was called King Street Trading at the time. It was in downtown Chicago. And if it wasn't for my friend, I would have been fired probably not even a month into it, right? It was basically showing that I had no talent, right? So then 9/11 happened and they closed the markets down for a week. And I was continuing, I was just sitting there all day when the markets were open, the U.S. markets, and they closed the U.S. markets for a week back then. And I wanted to continue to learn. So I started watching the German DAX overnight. So that's the stock market, the futures from the stock market of Germany. And I just wanted to see if I can figure out some kind of edge that I can implement in the E-mini S&P because that was the market that I chose at the time.
Yeah.
And I started to see these tendencies. So when the markets opened back up, I started to employ these methods that I learned in the DAX and the E-mini S&P, and all of a sudden, like the light went on, and I just started making money every day, and it was like 500, 1,000. And then at the time, I was trading both, so I was literally going in at 1 a.m. Chicago time to trade the opening of the German DAX. I would trade till 3 in the morning, 3, 4 in the morning, and that's like their lunchtime. And I would go home, take a nap, get back up at 7 o'clock, come back to the office, then start trading the U.S. stock market. Granted, I was a 30-year-old kid back then.
Yeah.
I was able to do it, but it just got me tons of market exposure, right? So anyway, with the S&P, I just started making money every day, and it was like, relatively.
Felt
it wasn't
smooth.
that much money trading wise, but it was like 500, 1,000, 1,000, 1,000 every day. And I was so convinced that I had figured it out. I lost every day for my first 2 months, almost got fired my first day. I walk in the owner of the firm's office and I bet him, I said, I want to make a bet that I'm your number one trader for 2002, right? So 2001 is when I started. I was named Big Cheese, made $1 million. So here's a guy that literally all that, to start. And I wasn't even making big money. I was literally just making like $1,000 a day. Again, when I say only trading terms, it's not that much, especially the trading firm. So
yeah,
he I mean, he's like, sure, we could bet whatever you want to bet. Like, game on. I'm like, done. So I bet him, ended up doing it. I made that first year. Actually, the Big Cheese, I made $2.4 million. And then, so that year, 2002, I made $2.8 million and got top trade.
What?
So,
Nice.
yeah. So from then, then I had the confidence, and it's like, and I kept going into into his office every day and saying, not every day, probably every week or two, saying, hey, I made this much. Can I increase my size? Can I increase my size? So that's another thing too. It's like when people hear my story, they think like I sat down in front of a screen and the firm gave me 1,000 lots to trade. That was not, I started with 1 lots and like went up to 2s, 4s. I just kept doubling it as I was making money. And the owner was fine with it, right? Because it's like you want big traders.
There's the return.
You got to prove you can make money. So that year, I made the 2.8, and then 2003, I made 10 million. That was my biggest year ever. And I was also 10% of the world volume every day. And that's how active I was clicking the mouse. So back then, the E-mini S&P averaged about 500,000 contracts in a day, and I was 50,000 of those most days, right? So I was literally, that's how active I was. But that's how market experience I got to it. Just to show you, as far as like what I'm going to show you on today, it looks very complicated. It's not complicated. I always tried to make my trading very simple. Even back then, I didn't even have charts up back then when I made all that money. I was literally just looking at the trading dome, the depth of market, the order book. That's it, right? And it doesn't get much simpler than that, is my point. Showing you, yes, you can make money by being simple in your trading. So
I think that's undervalued in a lot of spaces, of just having the simple system and not complicating it with a ton of noise.
right. Well, that's the thing too, is that I've noticed, the smarter the person, like, a scientist or a lawyer or doctor, they seem to struggle the most in trading because they overthink things. They want a reason for everything that happens in the market, and they have all these different indicators, and then they get, they freeze up when they go to take a trade because one indicator is showing them short, other one's showing them long. So, the bottom line is, the simpler you can make your trading, the better. And, if you are a smarty pants, you need to back off a little bit and not have an explanation for every single move in the market.
Yeah, be more flexible.
So from there, I made all that money for my firm and thought I had made it.
Yeah, you're killing it.
And then 2006, 2007, all of a sudden, literally overnight, I went from making millions, I couldn't make $1, right? And it was also a function of overall, like, is when the algorithm started to take hold of the markets, and it was making it very difficult for the click traders. So my firm at its height was like 70 traders. 2006, 2007, we were down to 13, right? So that's how quickly things changed for ease
a
of
lot
making
of struggle.
Right. So I was one of the last ones to leave. And at the time, I had amassed enough where I thought, okay, I could go trade on my own. Well, the reason was because my firm became like a scared trader, right? So my loss limit at the time was 100,000 once I got really big, and I violated that a couple of times. We'll talk about that story. It was very fun. But my loss limit was $100,000, right? And I was printing money, and it was fine. And then when the firm started going down, all of a sudden I would be down like 20 grand. This is after I made all this money. And I get this phone call from the risk manager. Yeah, what you got to look. And I'd be like, what? Literally, because they were a scared trader type of mentality. Like, they were afraid to lose. They didn't. Right. So it's like I kept banging heads with them. I'm losing money in the markets. And I finally said, okay, I had enough. It's like, you guys are obviously not risk adverse anymore. You're worried about me losing. I can't trade that way. It's hard enough to trade as it is right now. So we agreed to part ways. So I thought I'd be able to do it. I had enough money, that I'd made on my own. And when I tell the story that I made $15 million, I always get, well, what happened? Where's all this money? Well, you got to remember, first of all, you split it with your firm, right? So cut that in half, because that was the going rate at the time. And then you pay the taxes. So basically cut it in half again. I think my tax rate was 38% at the time, right? So yeah, it's a lot of money. I still had, right around $3 million that I had made. But when you have a lifestyle, and trust me, I had a lifestyle once I started making the money, right?
Yeah, you were buying things. You were living the life that you were feeding it.
It's all relative, right? So it's like I was making it $10 million in a market in 1 year. You have to average $50,000 a day, every single day, right? So there were days I was up 50 grand by 10 a.m., right? So it's like I'd go out and I was buying, buying my condo and stuff. That's fine. But I was buying like, racehorses and stuff like that. It's like, the racehorse was like 150 grand. No big deal. I'll make that in 3 days. Right. So it was all relative. So I don't beat myself up so much about that aspect of it.
I think anyone would.
Right. And then again, when that stops coming in, and traders, that's the problem with traders, or the fallacy is, you always think you're going to find a way, right? Because you have to have that mentality, that resiliency mentality where you're going to think, okay, I lost today or this edge isn't working. I'll find a new edge, right? You have to think that way because that's what gets you through losing days or losing periods, right?
Yeah.
So I just kept thinking, okay, that's fine. And I still have this lifestyle. I'm still paying my mortgage for a $1.6 million condo, stuff like that. And then all of a sudden the money's not coming in anymore. And then on top of that, I'm on my own. And it's a whole different ballgame when you're on your own and you have to live off the money you're trying to trade with.
Right.
It's very, very difficult, if not impossible. If you can't, in any aspect, I'm talking gambling, trading, if you can't lose, you're going to lose just because your mind just isn't in the right place. Like my firm, you're puking out early and oh, I can't lose this. This is my rent next month and this is my car payment. It just doesn't work. So anyway, I found that out the hard way too. So I spent a couple years doing that on my own, and then I had to leave the business. I spent 5 or 6 years trying to reinvent my style to find something that I was elite at. I just couldn't find it. And so I had to leave the business. I had 2 little girls at the time. I had family to support. So I had to leave the business 2013 and I went into medical sales. So talk about a slap of reality or eating crow, as they say. Like I would go in these doctor's offices because I was selling at the time genetic testing. And these guys treat you, most of them, not all of them, but they treat you like you're inferior, right? Because they're the smarty pants like I was talking about. So I had to go in there and listen to these guys talk to me like on some peon, knowing I'd made more money in 3 years than they're probably going to make in their lifetime, right? So it was a very humbling experience, put it that way. So I did that for 6 years. And then fast forward to 2018, 2019, Dr. Brett Steenbarger, who's probably arguably the top trading psychologist in the world now. I had gone, he was actually at my trading firm when I told you the story, we were going downhill. They hired a trading psychologist like that show Billions on HBO that they had psychiatrist role in there.
Sure did.
So they had the same thing with Dr. Press. So I started talking to him because I was struggling too. So we got to become pretty close friends. So he had known I was out of the business. So he called me in like 2018 and said, hey, he knew I wasn't trading. And he's like, you might want to check out this platform called bookmap.com, the software. It reminds me of what So I was at this firm, and that's when he wrote the book Enhancing Trader Performance. And he asked me if he can, sit behind me, and he was going to put me in his book. I said, sure. He couldn't really tell what I was doing because I was so active flipping in and out, but he just wanted to see what made me elite. So anyway, I'm in his book. So we came very close. So when he called me, he's like, this Bookmap platform reminds me of how you used to view the markets visually. So the minute I saw it, I'm like, I'm back. Like, this is how I have to see it. And I'll show you that a little bit today. So, but when I got back in, I didn't want to trade futures because I PTSD, right, from making millions and not being able to make money. So I was going to trade stocks, which I started to. And then I was introduced to this CME MBO data, this enhanced data that they started offering. Now it's been 10 years and it's still pretty much unknown, which is unbelievable. I'll show you that as well. And once I saw that information, I'm like, this is the most powerful thing I've ever seen in futures trading. And I'm going to start trading futures again. So that's basically, and then I got back into it again, trading very tiny. I was, using these trader funding companies because I didn't have 200 grand to put in an account, right? So I was just trying to work my way back. Started doing the educational for Bookmap every Thursdays, which I still do. We're going on, almost 10 years now that I do those. And I started my own trade room and teach people my methods and what I see in the markets from, watching millions and millions of contracts come through the market.
Wow. That's an incredible journey.
I apologize for the talk in the back. These are the markets.
Yeah. You know what? We're traders. Like, it's normal to have a little bit going on in your office because it's midday. It's the middle of a trading session right now. So
right. And this looks like news, by the way. I'll show you this. This is what I'm talking about. It's just markets were literally going to zero, turn around, and Nasdaq just ripped 150 points. Crude just dropped almost $1. So it's very difficult to trade right now. Put it that way.
Yeah. It's so volatile. That's wild. Well, I really appreciate you sharing your journey with us to this point. And then I'm excited that you're going to show us a chart. You can just use the screen share at the bottom to load that whenever. But I do want to say, what you have experienced there, having that setback where you literally had to take another job to take care of your family, being humbled by the market, is such a real story to have to share. And I appreciate your openness with that because the market will humble you like nothing else. I come from a career in nursing, and in real life, you have to experience so much humbling in order to persevere as a trader. And that's really hard for a lot of people. And a lot of people will just cry uncle and will go another route and won't take the pain, essentially, of working through it and being flexible and realizing when one edge isn't working, you have to adjust to something else. Otherwise, you just don't have an edge that is functional. And that's such a valuable story for you to let us know.
Right. Yeah. I mean, you definitely have to have a a certain personality to do this, and you have to be resilient. You got to be able to take a licking and keep on ticking, as they say, right? Because it is, I believe, and many people agree, this is the hardest profession in the world. I mean, you're going against the brightest minds in the world. People think it's easy because it's easy. The barrier to entry is very easy, right? All you got to do is open a futures account, pull up a chart, and click a mouse, right? You can get lucky your first trade, first 10 trades, and make money and think that you got it, right? But it's very difficult, and you can't, this isn't like something you can just hop on for 15 minutes a day and think that you're going to be a successful trader, because that's not the case, right? Again, you can get lucky a few times, but if you're not willing to put in the work, if you're not willing to, understand yourself mentally and how you react to losses and when things are going bad, it's just a great metaphor for life. Trading and golf, I think, are the best metaphors for life that you can ever do, right? It's like everything's not always rosy. You have your ups and downs, and, it's how you recover from the downs that make you the person that you are, right? Well, it's the same trading and golf. I'm a big golfer too, but they're both metaphors for life. So yeah, you have to have a certain personality, and you got to follow rules. You got to follow your rules that you put forward for yourself for your trading once you develop an edge. And then you got to follow them. You can't diverge from those rules, or you're going to cost yourself a lot of money.
Yeah. And in my opinion, and what you spoke to in your journey is that is how you treat it as a business. Like working for a firm, trading for a firm, they have those hard rules for you and they have a risk manager. Well, when you're trading independently and you're a retail trader, you have to implement those for yourself in order to treat this like a full business. You have to respect the fact that you shouldn't have unlimited risk, because you can't annihilate an account by being stubborn and holding to something that is not working, and not being able to let your ego take the hit that you couldn't read the market that day. And so recognizing that if you really want to be a successful trader long term, you have to be professional with it. And that means taking a loss and walking away sometimes. And that's so valuable.
Right. Well, not sometimes, many times, right? The main thing is we talked about a little bit ago is the loss limit, right? You've got to, again, I just like using quotes, Mike Tyson, everyone has a plan that they get punched in the mouth, right? So you can say when everything's calm, okay, this is my loss limit for the day. If I lose $1,000, I'm going to shut everything down. If you're a trader, you're probably a very competitive person to begin with, right? It's very hard, and you're going against other people. This is a zero-sum game. So
yeah,
that's one of my weaknesses. I'm too competitive with this stuff. I've always been, but it's like, it's very hard to take loss, and say, okay, golly gee willikers, this, I'll get you tomorrow, right? No, you're pissed off. You're like, I'm getting this money back. I feel like I just got taken advantage of. So in the heat of the moment, my point is the heat of the moment, you're not going to make clear decisions. And I'll tell you my awful story of me not respecting my loss limits. But in the heat of the moment, you're not going to be able to make clear decisions many times. We call it going on tilt, right? So that's why if you're trading with a brokerage firm, you just have them shut you off. You give them an amount, and if you hit that amount, you're done, right? It's that, and you're done till the next day. Big deal. It's one day. If you're on these, trading funding company things, just set your Rhythmic Scout and TraderBase, they all got them. Set your loss limit, and it shouldn't reset until the next day, or after Globex starts that following night. But you got to do that because there's nothing 100% in trading. This is 100%. You will have a day that you are getting crushed and you make bad decisions and you just don't get up, and then you cost yourself an account, right? So just quickly, to show traders what I'm talking about is back when this is after I was, making tons of money. This was 2004. I made 10 million the year before. So my loss limit was 100 grand. So my trading firm is supposed to liquidate me at 100 grand, and they did for a while, right? But then there were times where, especially as I made more and more money, and this goes for traders that get really confident thinking that they could do no wrong, and they start to ignore the rules. I made more and more money, and there'd be days that I'd drop 100 grand in the first 20 minutes of trade, and I would go home. I'd be like, I just leave, and I come back clear-minded at lunch, and I'd say, I call the risk manager, hey, could you give me another 50 grand? I sell down. If I lose that, I'll be done for the day. And they do it. And then there's certain days that I'd make it all back and make 300 grand, things like that, right? So they got into this negative reinforcement. Negative reinforcement is when you do something wrong and you get away with it, as well as I did, where now when I hit my loss limit, they weren't cutting me off, right? So, and then I wasn't cutting myself off because I was so pissed off. So 2 different days in 2004, and I actually just found my statements for these because I was on another podcast where I was talking about this, showing my statements. And it was literally 1 year or 1 month apart. It was February 6th and March 6th. February 6th, I'm sitting there, and I remember vividly, it was like there were 2 Fridays, I think. It was before I was going away for a wedding for some reason. I don't know why that affected my cognitive ability. I'd gone through my 100 grand, and no one stopped me. And I had lost the February 6th, I lost $800,000 in, I'm talking maybe 10 minutes, right? So they finally shut me off after I lose almost $1 million in one pop. And then, so this is the thing, and this is what I'm talking about. Like in the moment, like people can be saying like, how could you lose $800,000 and not stop yourself? Because I went on tilt, because I was so emotional, and it just like, you are just not clear headed when you're losing your mind. Right. So I would I remember waking up that next morning and thinking, what am I doing? Like, why would I ever, who was that person? Like, why would I ever allow that to happen? Right. So I obviously didn't learn my lesson, because 1 month later, I did the exact same thing. My firm did the same thing. They didn't shut me off, and I didn't shut up, lost another $700,000. So we're talking 1.5 over 2 trading days, stopped myself, and I have another $1.3 million in my bank accounts. Right. So it's like, that's the story that I want to get through. It's like, yeah, it's a lot of money, but it's relative. So for you, it could be $1,000. Just, if it's not working, just stop yourself, or you're going to be very, very, very sorry.
Yeah. And what you're saying is a prime example of, even if you've been trading a year and maybe you blow your account when you lose 2,000 for a prop funding account, whatever. It just depends on whatever your size is. It can be a big deal, and you can persevere. Every single trader takes losses. And so protecting yourself is such a valuable lesson. And like the hardship, I know the feeling of the waking up the next day of like, why did I let that happen? When I am clear-headed, I make the smart choices and I respect my risk and blah, 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 blah. But tilt is a very real thing. And I think no matter how long you've been a trader, you have to know that you're still human with an amygdala. And sometimes you're going to tilt, and to protect yourself is critical.
Right. Absolutely. That's the number one rule that I can advise anybody watching this podcast.
Appreciate that. So do you want to show us a little bit about your edge now that you kind of refound yourself as a trader and you educate on it, you trade it with the community? Like, what did you find?
Yeah. So again, I was introduced to this platform, Bookmap. And when you see the screen, don't lose your mind. Like, I get so many people like, well, I can't look at all this. There's a lot on the screen, but it's not technical. I'll go over it, but it's very simplistic, but it's the best edge that I've ever seen. So in the way I'm looking at this stuff, I need this stuff. So let me, I'll show you. No, I actually got in a position on. I just withstood that news story, but just waiting for another one that shove it down my throat, because that's what's been going on lately.
Active trader. I love it.
I'm actually short here. There was some sell ice earlier. So, when I told you I got back in the business, I saw this heat map, right? So this heat map is showing me, it's just literally showing me the order book here. Sorry, my computer's a little slow with all this stuff on here now. But this is showing me, basically where the big orders are in heat map context. And I can actually turn off this liquidity too. So this liquidity is, so right here, for instance, like you see this big orange band, that just means relatively you can see the size. And it's not even that big of an order. It's 75 lot. Okay. Compared to what else is in here, it's a lot. So it lights it up. And it's amazing how these markets travel to this heavy risk and liquidity, right? So this is the big money that are sitting in here with big orders that want to get filled, right? And they'll push the market to their orders for the fill. And how do I know this? Because this is the exact game I used to play as a scalper. I would literally like put, again, this is the E-mini S&P, and this is one that was 1,000 or 2,000 up on every price, right? That's how much things have changed. But I would put my order in, say, this is my order in the E-mini S&P, and the market would say, be down here. Let me just get out of one of these, because one, I don't want to get headlined again, and two, I'm not really paying attention because I'm on this webinar. So let me just get out of here. It's close enough to my, I don't want to use.
Thank you for giving us your time during the live session.
Oh, sure. Well, I didn't think it was going to be Nuxo, before the FedNet. So anyway, I would play this game where I'd put in my orders. So I'd put 1,000 on and say, and this is the E-mini S&P. I wasn't trading crude at that time. And I'd start, buying. I'd test the waters, and I'd buy a couple and see if the market would react. And if it would just kind of go up and hold, I'm like, okay, I'd buy some more. Then what I would do, it's called spoofing these days. It was not illegal back then. So I'd buy some more, and remember, my order's resting here, my offer's resting here. And I start putting in 1,000 lots below to scare traders into my order to get out. So
buy them up to your short.
Right. And then now I'm out. And then what I would do is I'd yank everything, and it would turn into a vacuum, and the market would just come right back. So the same stuff's happening today. That's what I'm trying to teach people, was like from my experience of what I used to do. So I know how I used to react and what I would do, like when I was right, when I was wrong. Back then you can see counterparty too. I'm going to show you a screenshot because I actually had it for another podcast. Like I said, I'm going to show you a screenshot of me actually trading back then. You can see what I'm talking about. But the whole point is, what I teach is based on and trade off of is based on my prior experience of trading millions and millions of contracts. So anyway, that's one of the games that I used to play. So the point is, nowadays, if you can just, in the simplest fashion, if you can just log into a market and identify where the heavy resting liquidity is, the market is very likely going to make it to those prices, within a day or two. Usually it's the same day. So for instance, this market opened up, look what it tagged. heavy resting liquidity, heavy resting liquidity. And then we'll get into this. This is the whole crux of my methodology is these buy an iceberg orders. But before I get into that, let me probably pull this up really quick. An example of
Thank you for your time, because I think a lot of people see this and it does feel overwhelming because there's a lot on the screen. But if you can break it down,
I'll definitely break this down, but I want to show you this. This will blow your mind what the market used to look like. So the reason I have a screenshot is because I used to put a video recorder over my shoulder and I would video record what I was doing to gain an edge. So that was one of the things Dr. Brett, he's like, I want to see what you're doing, to see what makes you elite. So that was one of the things I used to do. I used to video record my trading. So you can see here. This is me trading it back then. So this was with the order book. This is the E-mini S&P. This is when it was at 1,000. Look at this. This is how long ago this was. Right. So this is at 1,118. So you can see here the game I was playing, right? I had, look at these orders. So out of this 1,000 lot, this is very blurry, I know, but this was 900. I had 900 of those. I think that's 400 or 500. But you could see there was big size up and down the order book, but this was what I used to do. So I used to literally, at this time in this screenshot, I was short 300, right? So I was scalping around. It's another example. So look at this one. There was 2,300 in the order. You never ever see this ever, right? There's 10 lots up in the E-mini S&P right now. It's 2,300. I was 1,000 of those, right? So this is just a good example of what this is a great example. I would get long, for instance, right here I was short, but I was flipping it off. But then I'd swoop that up. I'd scoop that up. And then I'd push it into my resting order here and I get out, right? So that's the game I used to play. But here's the example I want to make. There's a couple things here. One, you can see this was counterparty. So back then you can see exactly who you traded with. Talk about an edge, right? So if I jumped up and I bought I don't know what that was, but it was quite a few. And I saw it was another local. So I was like a day trader type of guy that from another firm and they had their own house numbers, right? I'd be able to see who it was. And then it's like playing a poker game. I would know how many they could put on and the vice versa. They would know how many, and we would battle. There are other times I jump up and buy 1,000 and be a house I had never seen before. I'd be like, oh, I got to get out of these because you don't know who that is. It could be a Citadel that wants to dump 10,000 on the market, right? So that was an edge in itself, seeing who the counterparty was.
Definitely.
And then I actually had another thing that I had a developer make for me, which would show me. I'm glad you can't see these names because they're not very good names that I would make for these guys. But I would see exactly who it was right away and play the game. So anyway, this just shows you one, the size in the order book, two, the size I was flipping around in the games I used to play. So I haven't shown that very often, but that's what I'm getting at.
Awesome.
And I tell you, one, I know the games in these markets, with every resting liquidity, and I know how these bigger firms react or these bigger players react. So it was quite a time in the markets, and that's how I made all my money, right? And then all of a sudden, overnight, done, Algos take over, and then the market looks like this. Look at the difference in the market and the orders. Now you got 60 and 70 lots up versus 2,000, right? So that's just a function of, and that's going to lead me into what is the biggest edge in futures trading, in my opinion, is these big firms. They can't put in big size in the order book anymore. If someone comes in right now and puts 1,000 lot in, these algos will run this market away from them because they know most of the time when the big money comes in, they are not price sensitive. They just got to get the order done, right?
Yeah.
They got to get the order filled. Well, if they see 1,000 lot, what they do is they instantly put their offers in and then they front run the order, making this person chase. So then this person's got to buy, and it runs right into their offers.
Filled.
So this is the game that's going on with the algos. And you can see the game right here with the liquidity coming in and out of the order book. Again, it's hard to see with all the stuff on the chart, but you see this size flashing in here, right? So you just watch them and watch on the right here. So you can see this, and you can see that the liquidity come in and out. So this is liquidity that this algos coming in. You can actually can't see it right there, but the point is they're playing games nonstop, right? So,
right.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
So my point is, for the big money, nowadays they have to hide their orders. So the CME introduced in 2016 this MBO data. It's called market by order data. You can Google it. It's a huge thing in these markets where it's full transparency across the board. Meaning, right now, if you're using most other data providers, all you're seeing in the order book that are real orders are 10 levels up, 10 levels down. This isn't exactly 10 levels, but you get what I'm
Yeah.
saying. So it's 10 levels up. This is real. Everything else is stale and it's not real. MBO order shows you every order up and down the order book basically forever, as far as you want to go. So one, you can see, like I showed you in the crude example, you can even see it here. E-mini S&P earlier, there was a bunch of regress in liquidity and it got real close. And this is another thing that the algos do. This is another reason right here why firms use Iceberg. So you can see the market came up to this liquidity. They did not get their fill. Why? Because these algos picked up the size in the order book when it was there. It's not there anymore. You can see, and they ran it away, just like the game I just talked about. So that's why these firms are using Icebergs at their orders. Right? So the way the Icebergs work is they only have to display a certain percentage in Europe. So for instance, when this came down here earlier, and this is whopping, the point is they could show just a certain percentage. So when this came down here, I don't know the exact amount, but it was probably, a 50 lot or a 100 lot, right? And then when the sellers got real aggressive into that bid when it was there, they're like, oh, there's a 100 lot. I'm going to swipe that. And then behind it, this is the most I've seen in months, by the way. And this is not coincidence. Talk about, markets being rigged and somebody always knowing something. So for some reason, and they're not right now, but we'll see when the number, the FOMC comes out here in a little over an hour. Look at the size of this Iceberg order, right? So look at the size in here. There's 50 and 60 lots. Someone came in, bought 1,000, bought another 2,600, bought another 1,000. This is very likely the same house. So someone came in here and bought 5,000 E-mini S&P contracts, right? So wouldn't it behoove you to know that activity? So say you're short at the time and you're looking for an area to get out. Then you see someone bought 5,000 contracts. Well, you may want to peel out at this area, type of thing. So there's different ways you can use this. The way I use these areas or identify this activity in my important areas, right? So it's not for me to tell traders what they believe, what area they think is important. They watch it. If they think it's important, fine. What I'm telling you is to confirm that area with a stop Iceberg event. And now you have yourself an incredible edge in the market where you think this is at the support level and someone else does too. And now you got yourself a trade. So in this case, this is information as well. It did bounce here at first, right? It bounced about 15 points, but it never really got out of the zone. And then this is why I have 6 distinct stop Iceberg setups I trade off of and teach, right? This turned out to be a broken ice setup. So whoever bought here wasn't right. And I get this as well. Like, how do you know what they were doing there? They could have been hedging. They could have been getting out of a short. They could have been hedging options. I don't know what they were doing here. I don't care. You're never going to know. Don't waste your time trying to know. Just know the area is what's important because there's someone on the other side of this trade. So when this moves out of here, whether it be this way or this way, you're very, very likely going to get a big move because of the concentration of orders / traders in here. And you can see when this finally moved out of here and how I judge these events, whether they're bullish or bearish, is if it could push a 5-minute ATR out. So right now the ATR in here is almost 9, meaning it's rotating 9 points every 5 minutes. If it has the strength to fight the algos that love to whipsaw, if it could push the ATR out, then it's most likely more than not, probability-wise, and that's all trading in is probabilities, to move lower versus higher, right? So yes, this gives me a signal, and there's a reason I do this. This is a perfect reason why I wait for ATRs to put on my position trades. So if I'm going to go short here, I wait for the market to push an ATR out, and then another 15% of an ATR, that's this yellow line, that's where I'll enter because I know, trust me, I tried to get in my trades when I first saw this stuff. I saw how powerful it was. I just didn't know how to trade them properly. I just jump in right in the middle. I'd be like, oh, look at that. Big money's buying 5,000. I'm going to jump in right in the middle of the zone. And I just learned the hard way. That's not the market. If I force the market to push ATR plus up, that's where I go long. And then what I do, for me to be proven wrong, my stop goes all the way on the other side. So if I'm going to be wrong, the market's got to come back that full ATR. It's got to get through the volume event where I know there's trapped shorts, right, that we're selling that are wrong or feeling heat, right? This is all based on my experience as being a large trader. Then it's got to push another ATR plus out of the zone to stop me out. So again, I get all the time. Well, that erodes your risk reward. That's fine. I'd rather erode my risk reward than just jumping in a random area and getting whipsawed to death with these algos. This is the way I determine you have to trade these things these days because of the algos that you see right now are whipsawing the market back and forth, right? So if I'm going to be wrong in a position trade, if I was going to go long there, I'm in there, I'm out here. If I was going to go short, and I did not go short this event, but if I did go short here, my stock goes all the way up here. So just a quick synopsis of what's going on this chart that looks like there's a million things. There's a lot of things, but it's very simplistic. So first of all, you have the heat map. We just talked about the orders, the order book that are displayed here. Then these are just gamma levels. We can get into that too. This is the second most powerful thing I've ever seen in trading, and it's getting bigger and bigger and bigger. It's about to overtake stop icebergs for importance. It's the 0 day to expiration options game. That this is the newest manipulation in the market, right? So back then, when I was trading, I was one of the manipulators, right? But back then there were manipulators that would, push the market around. Well, now how they're pushing market around is they're loading up options dealers. The options dealers are not directional traders. They have to turn around so that they sell dealers options. The options are long, or the dealers are long. They have to come and sell futures. So this, and I'll show you this example too, if you want to see it. The options flow is running everything in these markets 90% of the time. Yes, you have pockets where the big money's in here or there's a news story, so on and so forth. But 90% of the time, the driving force of these markets are either algos or the options 0 day to expiration game where they load up the dealers and they push it and they have to hedge. Those are the main drivers in the market that I look at. So just finish this up about this chart. So you're looking at the liquidity that's distorted in the order books. You're looking at options levels. These are where dealers I know are going to be hedging. So at the time they were hedging at put support. It did react there. And then this other stuff is basically, this is my zone drawing tool. So a developer in my trade room found a way to draw this activity on the chart. I used to have to draw these by hand based on what prices this stuff fired off at. Now we have it drawn automatically. And then it tells me this arm is telling me if it got the ATR out of the zone. And then it tells me the L lines where I get in, line on the sides where I get out. Then we have reversion lines. So there's two types of trades that I take. I know I'm covering a lot here, but just bear with me. I'm almost done. It's two types of trades I trade. Whether I'll take position trades where I'm looking for bigger moves, and then I'll take reversion trades where these markets have this ridiculous propensity, like you see right here, to come back to the volume event. Whatever reason it is, there's multiple reasons. One, a lot of times the big money's underwater. This is what I used to do, right? I used to say I get long 1,000 here, and then it would go against me, and I'd have my finger on the puke where I was going to puke out my position. And if I had any bullets left, I'd do everything I could to get it back to where I got in originally so I can peel out of the trade, right? So that's one of the reasons these markets come back to these
Trap trader.
And then these algos love to stab it back. They know where this stuff fired off too. So again, I don't care. I don't need to know why it happens. I know it happens. So we have reversion trades where we can get in the 1 ATR, the 2 ATR, the 3 ATR. That's the ATR. And these markets have a propensity of one of the three to come back to the zone. And we have rules on which one you may take. But it's just unbelievable. I can show you probably 20 today. Like here's just, here's gold, right? Gold, I haven't seen an event in there in days, by the way, because it was roll contracts. Here's an example. Touch the ATR, right back to the zone, basically the tick, back out of the zone. So this is one of the trades. This is more of a scalp trades that traders tend to gravitate to scalp trading because they can't take the back and forth. This is a way to take trades where you're in and you're out. And then I had the position trades where I look for bigger moves out of the event. So that was a mouthful. I don't know if you're able to follow all that, but
I did. And I love it because
right.
What I hear is that this technique, the way that I am understanding it, please correct me, is that you are using these to identify the liquidity locations. And so in those areas, you need to be looking to see that there's going to be contracts exchanged here. And so this is an opportunity to either get in or get out if you're trading towards it, or you're trying to fade against it, or there could be trap traders that traded there, thought it was going to be a certain move. So then you watch out for a snap back to that position, which is a reversion trade, which I love reversion trades as well.
You picked this stuff up pretty quick, better than most of my room members after a month.
Well, thank you.
That's
I've been around
good.
for a minute and I like it. Like Bookmap is something that I learned early. I learned footprint and then I didn't lean into it too heavily, but I really like the idea of identifying the liquidity locations and then trading on them. And if we're moving towards them, you want to hold and push to it. But then you get there. I'm a big proponent of having a target and getting out of my trade because the whipsaw action is so dangerous. And I would way rather fall down, you make a grand on the trade. Like why on earth would I hold that to a position trade if I know there's a liquidity pool there? I want to lock that in.
Right, exactly. This is a very good example, right? So say you didn't take the reversion trade, but you had an area down. Say you're trading GEX levels, right? You're like, okay, I'm going to buy down here, and then this is my target because I know it's going to be very difficult for the market just to blow right through here because there's trap traders that were long here, including this buy ice that bought 1,000 contracts. It's going to be very hard. It's very likely going to react like it did the first time. It's probably going to react again and react again. So yeah, you can use this stuff in many ways. Again, I teach my methods. It doesn't mean that someone can't see something that I don't see. And I love to hear that, right? I love when my trade room members say, there's been guys in my trade room 3, 4, 5 years, right? And they come up with their own methods or what they look for. And I learn from that too. It's like, you know what? I never thought of that, or I never thought of that. So I love to hear it. And you can trade these things any way you want. What I'm saying is you probably want to listen to me to begin with, just so you understand what, from my experience. And then once you take off, then you can start using these any way you want. But you can see if you're looking at a support level, a Fibonacci or a Bollinger Band or whatever you're using that you believe is important. Great. I'm not, sometimes they work, sometimes they don't. Well, a lot of times people are like, in trading probabilities, like, oh, that didn't work because it's trading probabilities. Yeah, but it might not have worked because, for instance, say this was a sell ice and it just went right through it type of thing. So you're going to know more than you would normally know why the markets are reacting, where they're reacting. And this is the key. So you can use this stuff to validate. You should be using this stuff to validate your areas, whether they're trade worthy. And I do not put a trade. I don't care how good a trade looks or an area, I should say. I will not put on a trade unless I get my stop iceberg order and the rules around it. Right. So this is the most important thing in trading. This is what people don't understand. Everyone's watching price and candlesticks. And I'm not saying, I use candlesticks for structure and things like that. Candlesticks are important, but the patterns in candlesticks, they're a byproduct of what's going on with the volume, right? It's not the other way around. But candlestick patterns aren't driving the volume. The volume are driving the candlestick patterns. So you want to know what's going on, with your pattern. And then if it matches up to a stop iceberg event, now you have an actual real edge.
That's just a great point of like everything that is printed on a chart is based on orders, like orders in and like buy orders and sell orders. And that's what creates the candle. If the buy orders are more than the sell orders, then you get a bullish candle, and the inverse is true. So if we can learn how to read the order dynamic, then you can have such a bigger picture understanding of what the market is trying to do. If we're pushing, if we're pushing to a big order set, or if we're fading a big order set.
Right. Absolutely. That's the number one thing that I look at, right? Like the stop iceberg information again. So I have 6 distinct setups that I trade, right? I trade stop iceberg setups. So buy iceberg, sell icebergs, buy stop, sell stop. So stop runs are usually retail trader puke. So usually, not always, this is a case, not always, this will come up so you can see these huge buy stops in gold. This is the first event in gold in days, by the way, because again, it was rolling contracts. But most of the time, retail, and this is great information in its own right? So say you're watching a market and you see, this isn't a great example for this, it's called the Dumb and Dumber, but you're looking at a candlestick, right? You're like, wow, look at all this buying. I need to get in here. Well, if you're watching a market, and this happens way more often than it doesn't, but way more often than in holding, like here, and we call it, this is one of my 6 setups called the stop and hold. Most of the time, we call it Dumb and Dumber, where you get the retail trader puking. That's what stop runs are pukes, right? They have specific order IDs that the CME lets us see, same with the iceberg order IDs, that we know these are pukes, stop orders. This is another important thing too, because all these other educators out there, not all of them, but a lot of them, they'll look at a chart, at a candlestick chart, and they'll see a move and they're like, yeah, that was a stop. There's no possible way you can know it's a stop run unless you're using the MBO data and you see it's a stop run. Yeah, you can guess, like if it's a high that keeps getting touched and it rips through it, yeah, I'm sure there were stops there, but it's not a potentially meaningful stop run. This shows you with 100% certainty. I mean, look at this. There's nothing on this chart, and all of a sudden you get 220 stop runs, right? That tells me it's an actual stop run, right? And the other thing too that I didn't cover is for each market, I have thresholds that are tradable, right? So I don't trade every blip on the stop ice. So this is the subchart from Bookmap. That's what disseminates the stop iceberg data from the CME, right? The MBO data. I don't trade every blip on this. It has to be a meaningful event. And from watching these things for almost 10 years now and trading hundreds of thousands of these things, I know what's a tradable amount of volume and what you just ignore. That was in gold, it's 150. So if there's any stop or iceberg event that's over 150, I'm willing to trade that event, right? If it's less than that, I don't even pay attention to it, right? So in this case, so what I was getting at, say you're watching a market and it's moving higher and you can see these big green candles, or I use yellow, colorblind, right? So you're like, this thing's breaking out. Well, what do you think would be more important if you see big candles and you see buy ice, even if it's not icebergs, but in the market's moving up, versus you see it's a puke. Puking is not initiative buying, right? It's guys getting out. Yes, the market moved higher, but is it more likely to sustain and continue to go higher or reverse, right? So that's why we call it a Dumb and Dumber, because the retail trader is the dumb trader. I'm a retail trader now too. Don't take offense to it. It just means we're not as smart as the big money, meaning smart. What makes you smart is having a lot of money to trade, right? So the point is, if you're like approaching, you're breaking out of a balance here, or you're thinking about going long, and you're like, oh yeah, this is it. This is my signal. You're looking at a candle. But then you have this information like, wait a minute, this is all stop runs. This is very unlikely. This is not initiative buying. Yeah. This is probably going to reverse, right? So this is what I'm saying about getting the actual information that's driving the market. This is not the greatest example, because this was a stop and hold event. And again, how I judge these, look, if this was a bearish event, this should have never of what? got the ATR out of the zone. So it got the ATR. So those telling me this is my 6 events, stop and hold, where this was retail trader pukes, but there's somebody bigger behind it. How do I know that? Because I was able to push the ATR out of there. So now I'm looking to go long, and that's it. And look at this trade, right? So if I was watching this, I would, if you didn't distract me with this webinar, I'd be long and just get. But this is the exact pattern I look for, right? It's like it pushed the ATR out. Here's your retest for the reversion trade. If you want to take that trade, then this is where you get in. That's why this is drawing there. And then your stop goes here, and it's just off the charts, right? So this is just an example of what I look at across markets.
Yeah. Okay. I love your setups. Like, I can see what you're saying about how, like, is it really like a strong selling pressure, or are we just getting some stops hit and the move is this direction? So like, have some patience and let it go, and don't chase it too. Like, I don't enjoy breakout trades because I feel like they're fake outs all the time and they will come back. And for me, if it's breaking out, like at a minimum, I need to see a retracement and then a hold in order to go in the direction that it is pushing, because that will show me that the buyers aren't there and it wasn't just a stop hit.
Right. Yeah. And this is a great example. I mean, this is a retracement and a whole type of thing too, right? So it's this thing, well, right now it's down, but if it comes back, this confirms that you should probably go short, right? So I have different methods of getting in these too. I don't always demand the ATR, the retest, and then, like you just said, to confirm and hold. There's some trades that are so powerful, the minute it breaks out of the zone, you just want to jump in at the ATR line and get in, because, like, for instance, fail balance breakouts. So there wasn't one today. Something came in later in ES down here, but like, this is the best trade in position trading, in my opinion, right? And this is going to be using bar charts. Markets are in one of two states. That's all I'm looking at. They're either balancing or they're trending. They're balancing or they're trending, right? That's the one of two states. That's what I look for. And then I use my stock Iceberg events in my important areas. So this is a trade that I was actually on my webinar today, but my mouth was watering waiting for this. I just didn't get an event, so I didn't take it. Doesn't mean markets can't move without events. More often than not, if you're not seeing events, you're going to get this type of trade. Something happened here today that, again, especially on Fed day, I don't know what went down here, but this is not normal. But anyway, if I'm sitting here on a normal day and I'm watching this, that's a balance. So this is I have different strategies. So I have 19 different strategies, aka my important areas that I look for my volume events. This right here was a failed balance breakout, right? Tried to break out. Got through the high volume node. The high volume node of a balance area is just where the most trade occurred in the balance area.
Yes.
Then what I look for is a volume event that turns bearish. So this is a case where I would not wait for the retest or the reversion. I would jump in the minute it broke the zone, because this is probably going to do that. And that's exactly what it did. Unfortunately, I did not get an event here to take advantage of this, but this is what happens. This is why I said this is the best trade in position trading, is when you get a balance breakout. And just anytime you're confused, just think of things in common sense. Like, how would I react? Say you got long bunch of contracts in here, and you think you're going to get the usual bungee jump to highs like we've done basically every day since COVID, right?
Yes.
And it comes back and you're like, okay, this long's not working. Uh-oh, now I'm underwater. Oh, I got to get out, right? So that's why this does what it does. Very simplistic. All these longs that thought they had it need to get the hell out. So now what you do is you go to the real-time market, you look for your volume event, something that's happening right now, to confirm it. Once it confirms bearish, and then you get in. Right. So that's all I'm doing all day long. I'm looking for these top Iceberg events in my important areas.
That was a beautiful explanation. And the chart examples in real time of today's price action, like, it's such a great point of, like, identify your consolidation periods and the central point, the high volume node. And then if it's breaking, then it's breaking. If it's holding, then it's holding. That can give you a strong directional, inclination. It's awesome.
Right. And then when you get this concentrated volume, aka the volume events, that tells you now I have the fuel for the move to go where I think it may go once it breaks out of this area, right? So that's all I'm doing. I'm looking for the fuel for the moves, and then also looking for the algo gains back to the event.
I have a question for you about these numbers, because you're talking about like 1,000 orders, but that seems small. Am I wrong? Like 1,000 orders of mini S&P 500 futures contracts, is that normal? Because I don't know. I feel like I know like 50 traders, and if they're each trading a mini, that's 50. And I don't know. I can't know that many percentage of the active traders in the world.
Trading 1,000 lots?
Well, no, but like trading one or two. And if I know, I don't know, maybe I know 50 people and they're each trading one contract. I don't know. I feel like the number should be bigger, but maybe not.
Yeah, no, I mean, especially how you can usually judge is just look at the order book, right? So if you're seeing multiples of the order book come in an iceberg fashion, then it's, again, my thresholds for E-mini S&P, these have been the same thresholds literally since 2018. Is 700 icebergs, 500 stops. So meaning I need to see at least that amount to draw. And this is what the beauty of the zone drawing tool. You can get this on the Bookmap marketplace. That's the beauty of it. It will draw if it's threshold, it will draw. If it's not threshold, it doesn't draw anything for you, right? and Bookmap Bob announces and everything else. But yeah, I mean, 1,000 in here is a lot, and this is whopper. I haven't seen 5,000 in here for months. And again, somebody always knows something. That's the one thing you got to understand in these markets is manipulate. So for instance, they just came out with we talked about the headline ping pong and the ridiculousness. You're sitting in a trade and then Trump comes out and says something, the market rips off the page. Iran comes out and says, no, that's not true. Rips right back down. But just to show you, like, somebody always knows something, or someone's always trading off of information that's not public. They're trying to sell to Trump. We're not trying. They already started. It was on Google. The story was on CNBC last week.
Yeah.
They're charging $100,000 a month to get Trump's True Social posts before the general public, right? So it just shows you somebody always knows this market's already manipulated. So what I'm getting at is, let's just watch the number. And remember, these guys a lot of times aren't price sensitive. So yeah, you're playing for when this moves out of here, there's going to be big moves because there's other buyers in here too. But the point is, somebody came in here out of months and months and months of activity. I haven't seen this much. Somebody's buying 5,000 contracts 3 hours before the rate number. Like, give me a break. Like, if I were to put odds on it, I'd say 80% that the number's bullish. At least the first reaction is bullish and the market moves higher, right? So you can use this stuff for your thesis as well. Like, if you think it's going to be bullish, you see all this activity, you can get in, and this one wouldn't have been a good one to jump right in the middle. But again, they're not price sensitive. I'm not a betting man, even though I am. I will bet this market rips off the page, into the number.
Yeah. So interesting. Yeah. It's going to happen in less than an hour now, where we're going to get that data from the federal government on the FOMC. And it's been a very interesting morning with the sell-off and the Iran news, like popping off different news every other minute.
Ridiculous. It's so hard. Again, trading is so hard as it is. And then you throw in the headlines, you had no chance, right? So what we're doing is we're trading edges. We're trading probabilities of things reoccurring that happen all the time in the market. Well, news story, I don't care what edge you have. I don't care what you're trading on, but if you get a news story that's counter to that, you're done. And now for the last year and a half, it started with the tariffs ridiculousness, then it went into the Iran war. These algo reading headlines are absolutely killing it. So all they're doing is reading keywords and they're just firing in orders. There is no way. I have a squawk box that's when I turned down a little bit ago. By the time I hear it, it's already baked in the market. Unless you can develop a market headline reading or algo, you got no chance. So you just got to take it, right? And it's very hard to swallow, and it's happening. So here's the other. You can hear Bookmap Bob chirping back to the zone, right? So this was a reversion. This turned out to be a 3 reversion back to the volume event, right? So it's like these patterns. This is what I'm talking about. These patterns happen. I can, like I said, show you 20 of them a day. They happen all the time. Well, guess what? If I'm in a reversion, I'm like, yeah, I got this. And then Iran says, oh yeah, we're going to bomb something else. It's going to be like this. I don't care how good the setup looks. You're done. So it's very, very difficult, on top of already being very, very difficult trading, that is.
So the lesson there to me is, like, trade your system best you can, but watch your backside. Like, have a risk plan in place and have the safety and manage your stop loss. That way, if you're in profit, like, you need to be able to protect that and not just leave a naked trade where it can wipe you out. So, like, practice that risk management and trade your system, but at any point recognize that you could have your face ripped off.
Right. That's why you have to have your stops in and just eat it. If you get it stopped out because of that line, you just got to say, all right. And again, that's what we want at the very beginning of the conversation. You hit your loss limit for the day, you're done. Just be done. There's always tomorrow. Please take it from me. I would have an extra $1.5 million in my bank account if I took my own advice. If someone would slap me upside the head back then, I'd have another and just say, what are you doing? Like, there's always another day. Oh, by the way, you got another 25 years of trading. I'm pretty sure you're going to have other opportunities. You don't need to blow out lose $1 million in a day. Like, I wish someone would have actually told me that back then.
That's a great point, and I hope that people heard that. And speaking of, we only, we're kind of getting along in this episode, but any last words of wisdom or advice to traders who are struggling maybe and love the fact that you have been so resilient and you've cultivated such a strong edge? Like, if someone is still struggling to find their niche and lock in really, like, what would your thoughts be?
So the main advice is stop jumping from strategy to strategy, or what you think strategy or niche, right? So many traders will see something that works. It's all over, half the stuff doesn't even work. And traders are showing the times that it works when they're getting on, showing the posting the stuff on social media. But most traders are always looking. They think the more, and this is straight out of Trading in the Zone by Mark Douglas, right? They think the more information they bring in, the better they're going to do. That's not the case, right? You're probably going to do worse, like we talked about, having all these conflicting signals, right? So find an edge that works, right? So how do you know it works? Well, you can either back test it or you can listen to someone with experience, right? I'm not just saying myself, but my stuff is from my experience of watching these. And what's great about this edge too, you don't have to take my word for it, right? So I get all the time too. It's like, all right, well, how much do you make and what's your P&L? I can show two traders the exact same trade. One loses money, the other makes money, right? So for instance, say I got short this event, right? And the market's moving and then this will be quick. And I say my target's way down here and I have another trader's right here. Well, I don't hit my target and it comes all the way back, stops me out. And this trader got out here. Well, does that mean that the strategy is not profitable or I wasn't profitable with what I was doing in this instance, right? So what I'm getting at is with Bookmap, you can go back, you can replay the days. And if you have the zone drawing tool as well, it'll draw these events. Go back and see for yourself. Go back and test this for yourself. Say, okay, I'm going to focus on today. I'm going to replay today. I'm going to take every reversion trade, see how I do. Or I'm going to take these in my areas. I'm going to see how many events fire off in my areas that I look at, see how I do. So what I'm getting at to figure out if you have an edge, the best way to do it with Bookmap anyway is to replay it's a version of backtesting. Replay the days and go figure out for yourself. But find an edge that works and then follow the rules. That is what almost every trader doesn't do. They think something's going to happen, so they break the rules, right? So it's like they'll get this thing's ripping and they have their short area, right? Where they're supposed to get short and they're like, okay, like here, these are two spot getting, we didn't even get in options. We can do a whole nother episode on options because it's by far a very close second to when I'm showing you this iceberg information. But say they're ready to get short here. This is all they've been waiting for all day. And all of a sudden they see everything just ripping like, oh my God, this thing is going to continue to go. I can't go short here. And they don't take the trade and it does that, right? How many traders does it happen to daily, right? Mm-hmm. So what I always tell my traders is, and I tell myself at times when I try to think I know what's going to happen, I say, okay, well, if I'm so sure that this market's going to rip and I'm not going to take the short, I should bet my house on the long, right? If you know what's going to happen next, why would you not bet your house on the long? We don't do that because you don't know what's going to happen next. That means you need to put on the short. See what I'm saying? So that's the advice I give traders. Find an edge, develop your rules for them. And that's what I teach for my stuff. I show you the exact rules, everything that I look at, and then follow the rules, right? You can't, decide one time to put it on, another time not to put it on. If your signal fires off, you put the trade on. If you lose, on in the next trade. If you lose, on in the next trade. If it's a day that things aren't working, you hit your loss limit, you're done. Most of the time, if you have an edge, you'll make money overall. And I'll leave you with this last thing. Like traders have to realize in real trading, almost all profitable traders, most of their profit comes in 5 or 10 days in the entire year, right? Because most of the time your P&L is going to look just like a chart. Make a little, lose a little, make a little, lose a little, make a little, lose a little. And then you have a huge day. And then you go back to this. That's another thing. Traders think that they're going to make 500 or 1,000 or whatever number they want to put on it every day. That is not going to happen. You can average that amount, but you're not going to make money every day like you're punching in for a normal job, right? So your P&L is going to look like this. You're going to have a great day, and then it's going to go back to this. And then you're going to have a losing day, but you're never going to look like this. Why? Because you stop yourself and say, that's not my day. And then you go back to making a little lose little and then have the big day. And over the course of a year, you're going to have maybe 5 or 10 big days that make up your entire P&L. And you've got to understand and accept this about trading, or you got to find another profession, in my opinion.
Yeah. That's such a great point. Like, I really appreciate your wisdom and your openness with your story, your experience, and how you've reinvented yourself and found this strategy. Like, it's so inspiring about what the realities of what this looks like to be a trader who's been in the market for multiple decades. And thank you so much for your time today. Like, this is with so many gems in here, technical and psychological. And that's what I was hoping for. And you killed it today. Thank you.
Thanks. Yeah. And again, if you want to get back on, I'll show you that. You think your mind's blown by this stuff. Well, wait till you see the option manipulation and how you can,
I'm in.
You can see
do that for sure.
It's insanity. So yeah, anytime you want to get back on, I'm more than happy to join you.
Sweet. Yeah, let's definitely do that. We'll lock that in. People are going to have questions and want to check out and learn more about you. So we're going to put your how to access you, how to find you in the show notes. So you guys just click the description below and you can find all of Scott's information and connect with him directly. So you have a whole program. Yeah.
Well, thanks for having me. And hopefully some people had their eyes open. We talked about a lot of stuff on this webinar, right? And whether, like you said, the psychological or the trading edge or whatever, I'm showing you basically what you need to succeed in these markets. So take heed would be my advice.
It's killer advice. All right. Well, you guys, there you go. I hope everyone takes care of themselves and watch your back end and can find an edge and capitalize on this market. That's our goal for all of us. So cheers to that. And everyone just stay safe out there and trade your best. Take care, everyone. Bye.
Thanks. Bye.